So, Bryce, whether it was intention or not, did she do Jay Powell a little bit of a favor, give him a little bit of optionality so that if he continues to raise rates, nobody would be too surprised? At the same time, she didn't quite lock him in.
Oh, definitely. Yeah, with the change in the economic outlook and inflation expectations, they kind of had to set him up for a rate rise at the next meeting, and it's going to make it a lot easier for him. I think it makes sense too. I mean, since tax reform, this is the first meeting we've had where they've been able to just give us their economic outlook based on what tax reform is doing, as well as we've seen a significant jump in inflation expectations. I thought they were going to talk a little bit more about that. They talked about their own view of inflation going up, but it's the market's expectations that has popped right back up over 2%. So I think that sets up Jay Powell for a rate increase in March, definitely.
Right, Bryce, let's talk about market expectations for Fed fund futures. So come inside the Bloomberg here, and a yellow line is basically what we're expecting for 2019, and the white line is what the market's expecting for 2018. So you're looking at 63 basis points. It's two and a half and change hike, and then 95 basis points by the end of 2019. It's still only about 1.5 then for next year. How much more re-rating do we need to see in the Treasury market for markets to really catch up for what the Fed's going to do?
Yeah, well, I think that's an interesting point that you bring up, because if you look at surveys of portfolio managers, people like ourselves, we generally think there's going to be more rate increases than the Fed futures indicates. If the Fed futures jumped right away to, let's say, indicating a 4 rate increase for this year, which we think we're going to see, that would just distort the near-term income. You'd earn too much interest. So the Fed fund futures can sometimes lag what the actual market is going to be doing, just from the standpoint that you need to actually see the rate increase to be able to justify the current yield on the short end. But the fact that there is such a forecast out there, I mean, the rating odds for a rate increase in June have jumped over 60%. I think that bodes well for there being multiple increases. Just mechanically and just how they're going to do rate increases. They like to do it at the times that they have a press release. That basically puts them at 4 in 2018.